Yo, 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 yo. Hey, let's trade some Forex. Let's go. Hey, good morning, everybody. Hi, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Why is it a triangle, you say? Illuminati. Anyways, hey, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Today we'll cover dollar pairs, yen pairs, gold and oil, and anything else that you want. We hope that these webinars help you technically and fundamentally, and maybe even a little psychologically. And if they are, please visit TradersWay.com and open an account today. Traders Way, the good people at Traders Way, making this webinar available to you. So please pay it back by trading with them. You want an ECN account? Not a problem. Fixed spread account if you're a scalper? Not a problem. Variable spread? Not a problem. It's your way at Traders Way with Trader Wayne. So what's going on, guys? You know what? Let me shut this door. Hang on. Some nice moves in the market overnight. Everything's good. This is euro dollar. Let's just say you happen to be a bear. Pick one, right? This was a sell zone. 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 And this was a sell zone. All very, 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 very tradable. Very cool if you're a bear. So this is euro dollar. Remember, then on top of this, you need to have like weekly pivots and monthly pivots. These are just dailies. But still, you get the idea. If you had determined to be a bear monthly or weekly, then the only thing you're looking for on a daily basis is places to sell. And of course, you're looking for reasons to sell somewhere in there. Cool. Easy peasy lemon squeezy if you have a strategy. Okay. You say, oh, well, how are you supposed to know that? No, I didn't say that. I said if you already were a bear based on monthlies or weeklies, well, how am I supposed to know that I should be a bear? Yeah, you did your analysis and you made a decision. Ted says, how do you decide whether to use a 21 simple moving average? Well, first of all, I don't use 21 SMA, but it doesn't matter. Or use the pivot zones for you. Well, okay, you're confusing two things really, Ted. One is you have a hard level of support and resistance, and the other one is dynamic. Okay, so the moving averages, for example, right there tell you that this market on this time frame is technically bearish. Okay, so at that point you're already bear. Okay, done. So when I called my book Strategic and Tactical Forex Trading, the way I defined it in the book is this 2155 crossover creates your strategy, and your tactics are the 5A cross down in the, or the 5A cross in the direction of the strategy. So that would put you short here, that would put you short here, that would put you short here, and put you short here. Okay. Yeah, Brooke, it happens. You shouldn't have missed it here, though. This actually went higher than I would have liked. But you might have missed it. Oh, you might have missed it here. last week. Okay. But when you look at this from other time frames, you're supposed to have a fundamental bias. And every day I tell you, and 99% of the people still ignore me every day. It's fine. It's just for some reason how it works. You need to have a fundamental or technical bias before you even look to trade. So is it possible that you could be a bear here? When I wrote all this out, counter, trend, remember all that? Oh, trend. I totally messed that up, but anyways. Do you remember that? I had this counter trend. Here's NFP. We said if it goes up there, it's likely to counter trend. So I'm just saying it's been a while now, a week and a half since we said, hey, this could go bearish. You could set up a counter trend and the follow-on strategy, right? Down, 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 up, up, sell. 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 Down, 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 down. But how do we determine the up-ups before the next sell? Well, like we were talking about before, you can use price action, and I've taught you price action a bajillion times, all right? These are sort of basic guides on where the next sell will be. That's price action. Then you can use pivot points, but you wouldn't use weeklies or monthlies here. You'd use dailies because these are smaller. These are smaller. In the fractals are the same, but we're just focused in more. So now, based on this counter trend, especially when you get to this point, you drop into the daily and set up day trades. And that's how I had it before. You had already decided you were a bear, so how complicated could it possibly be, right? So if you had decided a week and a half ago around here that you might be a bear, well, great. So now that's a strategy play. So now how do you tactically enter that? Okay. Well, there's the drop. This is a sell zone. This is a sell zone. This is a sell zone. And this is a sell zone. Done. Profit, 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 profit. Boom, 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 boom. This is bigger than those 15-minute cycles, right, that you might have been trading before. Or, right, so those are kind of like spot trades. And I carry spot trades into session trades too. And a session trade goes like this. London is opening, so here's a sell zone, right? So we're going to trade the sell zone, right? But that's for London Open. And then you got to reset on like New York Open, right? And then you say, based on New York, this is going to be down here, and this is like a buy zone, so it pops up and breaks up. And both of these, like London and New York, these are session spot trades. So they basically last for maybe 8 hours, depending on the day. But usually, like London, will drop into New York and then counter trend or whatever, right? So you get 4 hours of London, you get 4 hours of New York, and you get an 8-hour day. What I'm talking about here is more of the 24-hour trade, to me, which is a small trade, right? And then there's another trade that'll last probably 100 hours, right? And then there's one that will last significantly longer than that, maybe 400 hours, okay? Day trade, weekly swing, monthly swing, okay? And then inside the 24 hours, then you could trade the market opens when volume and volatility increases for that amount of time, okay? And then if you live in New York or the Eastern time zone, 11:30 a.m. is London close. Right? And so that's your trading day ends usually around here. And then I like to restart trading around 5 p.m. Eastern. Early Asia. Okay? So in early Asia, I'm planning out the new trading day. And for most people, trading doesn't even start till London. So we're talking 10 hours before it opens. I got trade plans. Okay. So like this would be 5 p.m. and I'm thinking, okay, I'm a bear, so up there. Now this is 5 p.m. I'm thinking, okay, I'm a bear somewhere up there. Now this is 5 p.m. I'm like, okay, I'm a bear somewhere up there, right? 5 p.m. Okay, I'm a bear somewhere around here. But at least I know I'm selling. There's no debate. And I'm looking at the hard pivots, which are really just support and resistance. So you got to have support and resistance. And then I'll look at moving averages. Because it'll tell me, well, it'll give me little nuanced details like how strong is the current trend. Like, look at this. Like, I'm telling you, if you're a bear, you can't miss that. That's impossible to miss, right? And then a new lower low back into the moving averages, and here's your sell zone. Dude, seriously, that's impossible to miss, right? This one's trickier because it's so high, but that's why you get this one solid day of consolidation. And remember, this is sort of the sell zone, eh? It didn't even quite get there. So this one's a little trickier, but only because it fell so hard when you sold the first 2 or 3 times, right? This was a definite sell. This is a definite sell. This is a definite sell. And then this is not that definite, but you definitely want to redo it. So on a daily basis, you're thinking this. On a weekly or a monthly basis, you might be looking higher, right? There might be some other reason why that was the sell zone. Maybe it was like, let me go back to this and let me change the color. But it's probably this, right? Something in there. Something in the way. Ooh. Something in the way. Euros are, yeah, okay. Yeah, there's some good moves in the exotics. But like Euros are moved, what, 4 or 5 days ago? Let me, over here. Okay, here's your Euros are. Do you remember me setting this up, guys? I spent a lot of time on this one for you. Right? And I set it up right at the price. Do you remember? We were still in here. We were just starting the fib, and I'm like, yep, there's the sell zone, and off we go, right? How many people remember this? Chuck still sold it and in it. The Beatles. Well, I was doing the Nirvana version. Sorry. Yeah, you guys remember. Cool. Some of you guys are making money on it. You're welcome. Look at you guys. Crushing it. Yeah, hey, I don't remember receiving any cigars or bottles of wine. Mm-hmm. That's what I'm thinking, RJ. Ron's bought me cigars. Probably 3 times. Gold. Yeah, cool. Yeah, I know someone that made $3 million today. profit on gold. I'm like, hey, that's good. He's like, yeah. Good for you, dude. Hey, thank you. Oh, so let's finish the exotics first. So anyways, yeah, so we're hitting the first sort of reasonable place to consider taking profit. What this chart is telling me is if you're going for the monthly, this black line, you're not supposed to do it this week. But you guys remember the Nevada version? Cool. Wow, some music lovers, huh? So anyways, you should be thinking more about getting out than getting in. And like I just showed you a different currency. Do you remember like how we had a trade plan and the first one was right, the second one was right, and the third one was really right? By the way, Elliott wave people go ape shit over that third wave, right? And typically what you get here is a bit of a correction and then back down. I think this should be a three-wave correction and then maybe back down, but probably, let's say, half the length of the third wave, right? I don't know. I'm not a wave dude. But what we can agree on is the lesson that the big move and hitting a reasonable target will get some people out of the short, which will then give you the up. And then there are some stragglers that say, oh my God, please go back down. And if you go back down, I promise I'll do something amazing. Please go back down. And it comes back down. They're like, ah, boom. And they're out fast. Bing, 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 bing. Right? Thank you, 9 pound, 3 ounce baby Jesus. Right? That's what people do, by the way. And so that's what you might get a reversal here, a bigger one than you expected, and then therefore you threw all that good profit away. Or it might go back down a little bit. You notice like it might go down a little bit or it could go back more than a little bit. Not a lot more than a little bit, but 50% more than a little bit. So if you just dollar cost averaged, I'll dumb it down. Let's say we'll call this 50 pips of opportunity for 75 pips of cost. You dollar cost average that by just getting out now, and you end up on the long run making more money. Right? Because what you have to do is you take the 50 plus the 75 and divide it by 2, and what's your average? And that's, of course, assuming you're perfect and all that kind of stuff. And this is just better. So if you, on the long run, just get out here 100 times over in similar situations, over the course of the 100 times, your opportunity might have appeared much of the time, and the risk might have appeared much of the time, but over the long run, you just getting out is going to be actually more profitable. But here's the kicker. Here's the real juice. Here's the meat. Here's the protein. You will work probably, let's say I said 100 times. I bet you will work 500 hours less and make a little bit more money. 500 hours of your life saved simply because you had the discipline and the foresight to get out. Not because you were afraid, but you're like, oh, I'm going to dollar cost average this thing and blah, 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 blah. You have less to gain than you have to risk, so you might as well just take a walk. But now you're looking at new trades, or you're playing with your kids or washing your boat or something. Okay? DeSmart Robin says that this contradicts letting your winners run. No. I'm talking about having a plan. There's a difference. Letting your winners winner's run without a plan is just you avoiding risk management. Okay? In this situation, and I'm sorry if I didn't say this because I forget not everybody knows. In this situation, your target is here. Your maximum likely target. Maximum likely target. So what I'm saying is, if you had traded here, your maximum likely target is taking profit there. So what I'm saying is, you're here and you're about this far away. I just threw out a number like 50, but the counter trend is just as likely because this might be good enough because this is maximum likely profit on a counter trend. So I'm like, well, you're only 50 pips away, but you're risking 75 pips to maybe get it. Well, what the hell do you care? Take your money and run. You don't need the other 50 pips. So like letting your winners run for, again, risking 75 to make 50 is stupid, right? So we're talking about discipline, having a discipline to sell a counter trend that you set up a day and a half in advance, or having the discipline to take the shot, which is the lower high, which I set off of here, which then I created a 50% there. Like I set that up tickety-boo. Do you have the discipline to take the shot? And then when you hit probable zones of increasing levels of risk, I get the winners running stuff, but if you ignore risk, you're not being brave, you're being stupid. There's a difference, right? Okay, that's all. Okay. Now, by letting winners run, I'm talking about very often you get people that are in, like, remember that 4-hour London Open type session? They get caught in that where their trading history looks like this. Plus 22, plus 28, plus 14, minus 52, right? And right, minus 7, plus 1, plus 8, plus 33, right? Minus 27. And your trading history just goes on and on, page after page of absolutely nothing. Okay? So I'm suggesting you should have bigger plans, strategies, dare I say, strats, right? And then follow that up with tactics. Now, half of tactics is entering your trade, or I guess it's tactics, is manage your trade, right? Identifying levels and targets to take profit, and at the same time managing the risk of losing money, right? So moving your stop, removing risk, and all that kind of stuff. Okay. But if you see obvious risk increasing and you just ignore it because you want it to go farther, that's not letting your winners run. That's ignoring your trades. Okay? So make sure you know how to counter trend. Okay? Something in the way. Ooh. Something in the way. Hey, by the way, no, forget it. We'll talk about it later. So anyways, that's good. That's a good trade. Just remember, it's a counter trend trade. That's all. There's lots of risk here to your profits. Yes, it could go a little farther down to here, but there's this risk, there's that risk. There's a lot of risk here, bro. Okay? There's a lot of risk. Okay. And then another one that I'm doing are these trades, and these have been really great, right? Check this out. Yesterday's sell zone, today's sell zone. Just sick. WTF. Sick. And by the way, wow, no shit, this guy's back. I'm gonna have to really report this stuff to YouTube because it's happened before, huh? Alrighty. Euro dollar also counter trend move. Remember that? Same whole thing. There's your counter trend. Swissy was supposed to do something similar. Is that right, Simon? So YouTube has really got a problem then, huh? YouTube's got a real problem. All right, so this is just slowly climbing. If you recall, we set this one up even before euro dollar. Okay, and then here's the buy zone for that week. Let me do it in a different color. I guess I'll do it this way. Here's the buy zone for the week. I guess it was after NFP. That's the buy zone. Here's the buy zone this week. And so you're supposed to be translating this, right? Down, 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 down. There's the double bottom that set this whole move up. Remember, we were talking about counter trend here, even though this had been down for weeks. Now you get this up, 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 down, down, buy, up, 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 down, down, buy. You notice now we're riding the moving averages and all that kind of stuff, but where did the moving averages cross? Well, back in here. And we should be making our way back into that zone. But what did we just talk about on the other currencies? This is a confluence of an area that is saying take profit. Okay. Is that right, Chuck Duck? Why, lots of thumb down? So apparently I've received a lot of thumbs down today. All right, well, I apologize. Well, what about the sellers? Good call. You're back in a zone to consider. Okay. Okay. And by the way, you might want to watch, I think it was yesterday's video, we talked about the sell version. Okay. We had the 200 EMA. We had the top of the channel. Okay. And then we have this M. So you should already be on a smaller time frame, like even a 15-minute chart. And what you should be doing is looking for this. Okay. Now, the interesting thing you might find out, to whoever said, what if you were a bear, this might be next week's trade. It might not even exist this week. Now, what is it, Tuesday? Yeah, you might be doing this Thursday or Friday. So what I've been telling, especially my swing trading group, if you can't see it on Thursday, you're never going to trade it on Monday. So like literally Thursday and maybe Friday, you should be on the lookout for this if you're currently a bear, because we're not in bearish conditions, right? 21.55 going up and all that kind of stuff, and off of a double bottom, off of a reversal pivot, all that kind of stuff. So we have Tuesday and it's just getting up to the top of the range, right? It might even work its way back up here. That would be very unfortunate. That would actually set up a bullish trade next week. But whatever. If you were a bear, you need to be setting it up now. You probably won't get it today or tomorrow, but it doesn't matter. Your job is to set it up. I mean, you might get it today, right? So let's analyze this. Is this ready to sell? Well, here's a bottom. or a top, I should say. And we'll call that sort of a bottom-ish, or you can call that a bottom, if you will. Okay. Are we ready to fall? No. We still have this kind of mediocre support and resistance in there. And this is not technically bearish yet. So it could still do something like this. Okay. So what we would like to see on this smaller time frame is a very obvious reversal. Now, the most obvious one would be a lower low. Fantastic. Great. Sell the next high. Okay. That's one way. Or how about it drops, it comes up, it drops, it comes up. Now you sell. Sell. Okay. And so you sit and wait. And you're like, you know what? I'm going to sit and wait. I think it's going to reverse, but I don't think it's going to reverse today. Okay. Now, the price you wanted on Sunday afternoon, just to kind of throw that out there, if you were doing your job and you were a bear already, remember, so you know for a week and a half you've been waiting, and you said this is the price you want to sell at. So this spike, this fake out, if you will, that's how you'd interpret it. It wouldn't bother you at all. So you might even be on a 5-minute chart just looking for a pachow, and that's good enough. You got one trade short here, and then it'll make a lower low, lower high, and pachow, you'll get another trade short here, and then you're off to the races trading a weekly swing. Okay, and this is basically an Arctic turtle. This is bulls stretching their neck out to catch the monthly, which then only gives sort of fuel to your own fire. So let's drop that into a 5-minute chart. How would you be playing this? Okay. And you'll say, this is what we wanted. We were waiting for this. This is in your mind where bulls would get out. And now we're back into the range. So this weekly M3 was that price. So we know that's basically the top of the range. So what you'd be doing on this 5-minute chart is maybe selling Stochastic cycles. Okay, that's one way of doing it. So let's do that. Okay. Now that you've kicked off resistance, it's game on with the Stokes. Okay, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, which would look something like this, right? Down, 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 up, sell, down, 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 up, sell, down, 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 up, sell. Okay. What do you think, guys? Does that make sense? Drilling down from the top, down, 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 down. Oh, thank you guys for subscribing. I appreciate that. Oh, just for those new subscribers, here's the process. Go to tradersway.com, open up a demo account. Well, Jorge says only in a 5-minute chart. Well, you already have your strategy, so it's all tactics now. But you can use a 1 minute if you want. Okay, so go to tradersway.com, open up an account. Even a demo is fine. When you're in your back office, download MT4. And then in the description below this video, there's a link that says download my chart templates for free. So you can click that and download my chart templates for free, install it into your new MT4 account from Traders Way, and you will now have my charts, my indicators, my profiles, my chart templates. There's there's got to be 100 files that get installed for you. So, okay. Copeland Low, that's you, So here's the thing. First of all, I'm not going to put you into a trade. Second of all, what I just showed you should have been enough information because it's been very, very easy trading on Euro Turkish Lira for quite some time. There was a little hiccup, if you will, over the last 10 days or so, but it's re-entered back in. It should be easy. So with that being said, since I've already analyzed it and I already showed you what I've been doing, and you still don't get it, I invite you to go to fxbootcamp.com and sign up for training courses. Now, later this week, guys, maybe tomorrow, I'm going to send out a discount for video training courses for those who are new. I'm going to send out a discount so you can get everything for cheap. And then I'm going to send out a discount for live coaching. And this is a true FX bootcamp. This will be a ton of work and will open your eyes. This will be like laying on your belly, crawling under barbed wire with grenades going off in the distance, and real hardcore, real person coaching, real work analysis. So I'll send out a coupon code for that. But you better know your stuff. If you show up and you're like, I don't know how to trade, that's not for you. Go to the videos. Okay, so keep your eyes out for that, because I'm going to Harvard for a month. So you should take advantage of the month when there's no volume and volatility. You probably shouldn't be trading very much, and you should be focusing your time and effort on your education, like I'm doing. Oh, did I tell you? Oh crap! I didn't even tell you. I got my assignment. I got this. Here's the blueprint. Right. I got one of the river houses, and I don't know which one. I have the blueprints of one of the river houses, but oh my God, what an amazing place. And they told me write my room assignment, and I look it up. It's 2 doors down. Same hallway, same everything. 2 doors to the left of the exact room Zuckerberg invented Facebook. And he ended up hiring his roommates. So he was telling a story that he was doing all his work down in the computer lab at Harvard, but the computer lab is in the Science Center, and it's in the basement. And the Science Center is not an old brick building. It's a big, ugly concrete building. So he said he'd be down there working on the code for Facebook, and reporters were calling, and other people were calling. What's going on? Hey, I want a page. What is social networking? What's social media? What is all this stuff? And his phone wouldn't ring because he was in the basement of this concrete building. So he hired his roommates in that room to take phone calls and tell people what Facebook was. And now they're billionaires. So literally 2 doors down. How cool is that? Yeah. So I'm going to pee on the door. And then I'm going to go over to Wigglesworth, which is the building Bill Gates was in, and I'm going to pee on his door too. Because actually, I don't like Zuckerberg that much. I don't know him personally. I don't like Facebook, and I hate Microsoft. So I'm gonna pee on his door, and then I'm going to go over to Wigglesworth. I'm going to pee on his door. But anyways. Yeah, but so did Bill Gates. He didn't do anything either, but it's just interesting. It's just interesting history. Yes, we do actually have a bundle. We used to call it bundle for intermediate traders, but we changed it. So the easiest thing is I just give you a coupon code and you have everything. Okay. I'm leaving Friday, Mike. Yeah, I'm working with the executive director of the PhD program for Harvard Business School. Yeah. Oh, for sure. Yeah, Ivan, there's I don't know, I'd have to guess 40, 50 hours of videos. Probably more, to be honest, but more than enough. So on it, you guys should be focusing, while I'm gone, you should focus on your education. Okay? at this rate. So, yeah, I'm not a big fan of Microsoft or Facebook. So, all right. I mean, we've talked about these so much. I didn't get Mario Draghi's comments this morning. What did he say? So we're still stuck in consolidation, so nothing's happening here. But get ready, like this is what pre-summer looks like, and then this is what summer looks like. Yes, yes, I will send out a discount to all the courses on FX Bootcamp. Now, I sent out a really nice discount to some people. I don't think it was to many people, but I did give some people a discount. Oh, I can't even remember now. I don't know, a month ago. And I'll probably just resend that same thing. I have to create a new code, but. Oh, and by the way, we've added. Oh, is that right, Brooke? Cool. We've actually added a course. I don't remember what Ryan called it, but basically, well, yeah, truly basically, it's like a technical analysis 101 course. So if you're quite new to Forex, what is a moving average? How does it work? What is this? What is that? Let's start from the very beginning kind of thing. We've added that as well, so that's new. If you're pretty new. Okay, guys, thank you for that feedback on Euro. That's really cool. Man of Many Talents says, thanks, Wayne. This has really helped my trading a lot. You're welcome. Oh, is that right? Steven says he got the discount and bought. It was NFP. Cool. So I hope you're kicking butt. I hope you're loving it. Imagine you're drinking like 20 years of trading experience and you're just drinking it down in a month. Some of those lessons took me years to figure out. And I am not joking. And hard fought years. All right. Where do we want to go? You want to look at nat gas? Okay. Hey, does natural gas use pivot points? Let's see. Here's the monthly sell. Here's the target. Could be a rabbit. Could be. So it reversed. Here's your double bottom. So now the next move is this way, right? If it's going to reverse, that's what's next. Now the thing is, there used to be, I don't know if it's still the same, there used to be an inverse correlation between oil and gas. So if nat gas was going up, oil would be heading down. So let's see if that's still true. Let's just do it crudely and put this on, I don't know, 4 hours should be enough. Yeah. And then let's look at WTI on a 4 hour. And actually, they're positive correlations, aren't they? Yeah, it used to be inverse, but that doesn't look inverse to me. Draghi has a somber tone. Well, you know what? Europe is really screwed up, and it should be somber. Pardon my French. It's two things come to my mind. First of all, it's been 12 years. Hello, it's been 12 years. So that's one thing. So whatever they've been doing doesn't work. Remember, the European Central Bank said things like, we want to do less for longer. Do you remember that? I couldn't believe how dumb that sounded. Yeah, we haven't done anything for months and months and months and months and months and months, but the European Council has decided to do even less, but for a longer period of time. Stuff like that. Or, hey, our economy has shrunk by, bajillion percent. What should we do about it? We should jack up taxes and cut spending. What the heck are you talking about? What economics school did you go to? Because in America, right, greatest country in the world, America, Americans, we cut taxes and we increase spending and we create demand where demand didn't exist. So anyway, what did we learn from this whole financial crisis? A, the way that the European Union was created was flawed, and players took advantage of it, aka Greece and others. But that was the game they were told to play. They looked at the rules, they did what they did. Then the response was, jack up taxes and cut spending? Well, you just made it 10 times worse. And then finally, when they're like, okay, 4 years, 5 years has gone by, and things are even worse now than they used to be, and Greece is literally on the brink of collapse, and the euro is literally about to break, maybe we should do something like what the Americans were doing. We'll do some quantitative easing, but we won't do much because we're prudent, right? So anyways, the way that Europe looks right now is going to be like, they've already lost a decade. Remember we used to talk about Japan, the lost decade? Europe is still right there, man. It's going to be a lost generation. Okay? Now, a pure capitalist economy is not perfect. Absolutely, and nor is it supposed to be perfect. A capitalist economy is supposed to have winners and losers. It's supposed to have booms and busts. But if you make a lot of money during the boom, and then you save it during the bust, well, then you're doing your job and you're going to be filthy stinking rich. And well, that's what capitalism does. And if you didn't make a lot of money during the boom and you didn't save save in anticipation of the next bust, then you get slaughtered with the pigs. It's just what happens in capitalism, and capitalism is brutal that way. But if you're a big bank making stupid loans to stupid people with stupid money, you're supposed to go out of business and not get bailed out. Right? So I'm not saying capitalism is perfect. People will lose jobs, but they're supposed to lose jobs. But anyway, so now we're so concerned about, everyone's job, that now governments get involved and this filter really screws things up. But when you have a less form of capitalism, there are consequences. So we've said this before, and I'm not completely poo-pooing on Europe. I'm just poo-pooing on the European response to economics. Because if you studied economics, you're like, that doesn't make any sense. Whatever they're trying to do doesn't make any sense. But when you look at the European economic model of their form of capitalism and democracy, first of all, I'm not sure democracy is the right model. Whoa. But anyways, capitalism is. Then you take a look at the European version. They're twisting the valves, so to speak, of capitalism to get the type of society they want. And they say, we don't want an American version. Cool. I'm totally into that. I don't necessarily like driving through strip mall after strip mall after strip mall. Like, hey, look, a Home Depot and a Walmart and a TJ Maxx again, right? So I get it. So you change, you turn some valves, you pull some things, and you're like, okay, here's our form of capitalism. And the consequence of that is high unemployment. That's just the consequence of it, which is totally okay. But then you're going to have large amounts of people without work. So now you're going to have to pay for them. Otherwise, there'll be riots in the street. And so there's that form. Okay, I get it. And maybe I even like it. I don't know if I do. But I kind of like the Hong Kong model. But anyways, so there's these consequences, and they pull the levers and dials and turn the valves, and they get the type of capitalism they want. But the design of the European Union was flawed, and then the response to the flaw becoming apparent was inadequate, woefully inadequate. That's all. So Draghi was a little dovish. Yeah. Okay. Sure. Makes sense to me. I was a big fan of the EU when it first came out. And I've told the stories a million times, so I won't do it again. But I'm hanging out in Spain and sorry, in Catalonia, hanging out in like a 500-year-old farmhouse converted into a nice restaurant in Catalonia with these traders from all around the world, several of them European. And I did my big speech about how the Europeans have taken the best of the American model and they're improving upon it and all this kind of stuff. And they all laugh. They're like, there's no way the euro is going to work. I'm like, no, it's going to be great. It's going to be great. And they're laughing. They're like, no, it ain't going to work. I'm like, why not? They're like, you can't trust these guys. You can't trust those guys. And those guys are going to rape and pillage. And these guys are going to be freeloaders. And the Europeans didn't like the other Europeans. Didn't trust them, didn't like them, and they're like, that's why it ain't going to work. And I'm like, oh. So a very interesting history lesson, because in the beginning, that was, I think, 2007, I think, that dinner happened, 2007. So the euro was quite new, and the financial crisis was knocking at the door. At that conference, I made a call for a 5,000 pound yen short. And I was wrong. It was 10,000. But I called it to the day. Well, I called out a particular, not a day. I called it down to a week. I said, look at this. That means 3 months. Go figure it out. In the weeks around that 3-month period, pound yen is going to move 5,000 pips down. And it did. And then some. I think it was 7,500 pips down, but I said 5,000 because I was just rounding. But when you make a call like that and you're telling people the week it's going to likely to start happening, jaws dropped. I actually did call a specific day, thinking about it, because it had to do with 3-month notes rolling over. So yeah. So anyways, whatever. Okay, yens have looked down and they still look down. Cool. This one's been sold hard. So I had this as a trade plan. Sorry. But at least I got the direction right. You want to update this? Let's see how to trade the pound yen if you were a bear. Okay, let's do this. And I'll make this red because it's selling. All right, let's try this. So you want to be a bear on pound yen because we identified this as a top. Okay, cool. Sell zone, sell zone, sell zone, and sell zone. All right, I'm sorry, it only worked for 3 out of the 4 days. Cool. Now the thing is, are you planning tomorrow? Okay. If you're still trying to figure out what to do today, you're going to lose money. Okay. If you're trying to figure out what to do today, you're going to lose money. You should be figuring out what you're going to do tomorrow. Gold. I thought we did gold, but maybe I skipped over it. Sorry. We'll do a different chart. Where is it? Can't I see it? Oh, it's up there. Okay, are you a gold bull or gold bear? Yeah, Chuck, I think you're going to need the Fed meeting before you get on any new trend. So if you're looking at a double bottom, I would still just stay out. Okay. Yeah, maybe you'll breach it and give you a mood trade. Mbuso, feel free to answer, everyone. Are you gold bull or gold bear? Stevie C is all bullish. Haha! How come brokers have such different swaps? It's how they make money, actually, because the vast majority, if not the entire population of retail traders, trade without having any knowledge or care. And brokers, because they're forced to have such small spreads, that without you knowing it, they're going to jack you on the swap. And if you have tens of thousands of traders and hundreds of millions of dollars floating at any given period, it adds up to pretty good money, right? So I just recently compared the swap rates at Traders Way compared to some of the big boys, and I mean the big boys, and they're ridiculously better at Traders Way. Traders Way gives you very good swap rates. Very good. I'm earning 1,000% on my money on some of these. And then you go to a different broker, one of these big boys that does lots of advertising that you've definitely heard of, household names. You pull up the same pair that I'm earning 1,000% on, you're earning nothing. You're paying money. You're actually losing money on the swap on something I'm earning 1,000% a year on. Now I say 1,000% because I'm taking the swap and I'm calculating it against my actual cash that I'm using as collateral, but nonetheless, right? So I'll show you. Well, I'll show you a great swap, and you can go compare it to another broker, and you'll come back to Traders Way and open an account just like that. If you're interested in trading truly like an institution, where swaps matter a lot, I'll show you what Traders Way gives you. You'll go somewhere else, check out the swap you're earning at your loser broker now, or compare it to a different broker, and you'll say, "Oh my God, Traders Way is awesome!" And you'll just move. You'll move your money. So maybe we'll do that after. We'll end that way. So I want to see Mbeso if he's on. I was a bear, took me on. Okay. Mbeso is a bear on gold. Let's do this from a point of view. Now, first of all, why would you be a bear? I'm looking at this on a daily chart, and I can't fathom being a bear. Okay. But you're a bear anyways. All right, cool. So let's show you the benefit of having a strategy, in this case, a bear strategy, and sticking with it. Okay? This is your sell zone. There's no trade. This is your sell zone. There's no trade. This is your sell zone. You might have tried, but you probably broke even. Here's a sell zone. You were profitable, and then came back to break even. So I'd say in that course of, these are daily candles, right? So these are weeklies. So you're doing quite well. You're profitable for a day and a half. So you probably made money here. Here's your sell zone. You made money here. Here's your sell zone. You made money there. And then this one was breached because this is your sell zone. There's no trade. So you didn't get a trade, didn't get a trade, didn't get a trade, made some money, made some money, made some money, didn't get a trade. Cool. Okay. Now, if you were a bull, okay, there's your trade zone, you got a trade. There's a trade zone, you got a trade. Here's a trade zone, you didn't get a trade. Here's a trade zone, you did get a trade. Here's a trade zone, you didn't get a trade. Here's a trade zone, you did get a trade. Here's another trade zone, you did get a trade, and now you're up here. So made money, missed out because you didn't get an entry. Made money, there's 3. Didn't get a trade. Didn't get it. Well, you probably broke even and made money. So 1, 2, 3. So you had 4 profitable trades. If you're trying to figure out things day by day by day, you're going to lose money. Okay. By the way, you're up here, and that's on a weekly basis. That's a moo trade, and the rule there is never, ever, 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 ever sell. Futures trader says, can I ask you a question? Oh, for sure. Oh, the Smart Robin says, it's actually insane. I just compared brokers and some charge negative swaps for Euro Turkish Lira. Yeah, that's what I'm talking about. And you're talking about big, well-known brokers. And they're like, hey, we'll give you 0.5 spread on the euro dollar. And you're like, oh my God, I can save a half a pip on my spread. Okay. And you sign up, and then you get raped on what actually makes you big money on the long run if you're a professional trader. But, they got to make money somehow because they're losing it on the spread. Well, then you put the wrong order in, right? Anyways, Jeanette, oh, did I miss the question here? Sorry, so much going by. What's the weird Fibonacci he's using? They're called pivot points. Guys, if you don't know these things, like, oh my God, you should freak out right now. If you're looking at this chart and you don't know what to do, and you don't know what it means, first of all, welcome to the world. You just found 1/2 of everything you need to know. The other thing you're going to need to know is price action. But I'm showing you leading indicators here. Look, I'm looking at tomorrow's trade plan. You should stop and drop everything else that you're doing. You just found what you need to succeed. And if you don't believe me, just hang with me for a month or 2 or 3 or whatever, as long as it takes. And at some point when I've convinced you, visit fxbootcamp.com. I'm going to send out a deal, by the way. I mentioned this before. I'm going to send out a deal so everyone can save hundreds and hundreds and hundreds and hundreds and hundreds of dollars. But you have to be on the download list. So in the video description below here on YouTube, there's a link that says download my chart templates for free. I'm going to give you all my chart templates for free. Ciao. If you would like a discount to the training so you can spend the next month training while I'm spending the next month at Harvard, go on that list and sign up. Okay? But you should say, oh my God, if this is everything I need, I know where I need to focus now. Okay? This is it. This, right? And I'm not like, this isn't like some secret magic crystal ball nonsense being sold to you as a get rich quick scheme. I'm the exact opposite. This is standard operating procedure. I'm going to teach you how to understand how the market works, how to create trade plans, and then execute the trade plans. Okay? There's no yellow Lamborghini dreams anywhere. You know, hey, if you join, you'll buy a Panerai. Look, I have a Panerai. I'm so successful. Woo! Woo! I made it. Yeah, I made it. You know what's successful? You know what costs more than that? Sending your kids to a horse camp. Okay? I think I'm going to do it tomorrow, Joel. But anyways, make sure you're on the list. If you're not on the list, then forget about it. So anyways, that's that. So gold, up, 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 up. Great, great, great. Oops. And what time is it? Oh, you know, the exact same time as yesterday, 11:44 or 8:44. So anyways, we covered it a lot today. Lots of technical analysis. I don't know, did we really talk about fundamentals today? Not really, but you know, I thought it was a good day. It was an all right day. The markets are moving. They're definitely trades. I'm noticing that you get like 3 good day trades in a row and then the giant sucking sound. Oh, how do you get on the list again? Underneath the YouTube video, there's a description area. In the description area, there's a link that says, click here to download my chart templates for free. Do I trade crypto? Well, just personally, probably 50,000, 60,000 this year, maybe. But it's just a small percentage. So 60,000 maybe. But just, I don't know, nothing serious. So you click that download link. 2 things happen. It's going to say, hey, what's your name? What's your email address? Great, cool. Now you're on the list. Also, it'll give you all my chart templates for free. Okay? Simple enough, right? Oh, my pleasure, Odette. These would be, these are the monthlies. Oh, thank you. Those are the monthlies. Okay, good. So some of these are lasting weeks then. Very nice. Yeah, I don't usually look at this chart for my monthlies, so that's kind of interesting. So my bad if I got the time frame mixed, but I think you're right. These are monthlies. So like, look at this. You bought here and it went up for 4 months. Right? Just imagine. Look at the price action. Up, 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 down, down, buy. Up, up, up. Look at the roll reversal. Like, my God. Down, down, buy. Up, 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 up. Down, down, buy. Up, 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 up. Another roll reversal. Buy. But this is like a month. This is another month. This is another month. This is another month. Like, oh my God. I remember being stuck here now that we're talking about this. Remember being stuck here when I was teaching you range trading? Check this out, though. This is the monthly buy zone. Pachow! Nice! I don't like trading gold, though. That's the funny thing. Not gold futures, anyways. Oh, I usually do futures traders, so don't, right? So don't freak out, futures trader. You're welcome here. Just, okay. What I'm teaching people is how to plan it out tomorrow. I am not trying to tell you what to do today. Okay? So when I'm talking about range trading, okay, futures trader, and we did it, you can see we talked about it for over a month. I'm doing lessons about stop using Fibonacci's in a trend because the trend is dead, and that you can probably kill your 2155, and that we should be using oscillator cycles, and that you should be planning on buying support and selling resistance, and it's going to stay moving sideways forever. And so I'm helping people in the moment in here, but my goal is not to put you into a trade. Okay? Futures trader, you've been here like a half an hour. I've been here for 15 years, dude. So you're not quite accurate. I know what you're saying, and I'm okay with that because I'm not trying to put people in there, right? So the idea, if you can listen for a second, futures trader. Oh, Jonathan's new to trade away and loves it. Right on. Okay, is you start with your strategy, you work your way down into a tactics. Oh, okay. I don't recognize your name. Okay. So the idea, I mean, just one of the patterns I teach like a bajillion times is all about a second chance, right? No, I've been doing webinars for 15 years. Anyways, so the conservative trader is always about the second chance, right? You see what I mean? The conservative trader, as you mentioned, is always looking for second chance entries. Okay. What I'm trying to avoid to do, or here's what I am trying to do. Let's make it sort of a positive statement. When we are rising, I'm not trying to get you to be a bull, go be a bull, buy dips and all that. You should already know all that, right? Okay. So what I'm talking about is up here is a level of resistance. And in this level of resistance, people that are buying will take profit or should take profit. So I'm talking about a day ahead, several days ahead. And then when we get there, I do talk about last hurrahs and stuff and someone who will buy it there. And then I'll talk about this is the double top that sets up the reversal. And in fact, in my book, I talk about the old man easing in the hot bath and that you should let it break and catch the pullback. You know what I mean? No, Derek, if you don't know how to trade pivot points, either work with me every single day or take a course at FX Bootcamp. Okay? So you're saying about like the second chance and stuff. It's all about the second chance. And that's like one of the main parts of my teaching is that you should anticipate areas where price is likely to roll over and then set up trade plans to trade in the direction of your bias. Okay? I use pivot points as a leading indicator. And I use price action as a leading indicator. And you can get rid of everything else, in my opinion. Okay? Right? So for example, if I'm a bull tomorrow, I'm going to want to buy somewhere around here. Cool. So what am I going to need now? It's already broken out. Great. Well, how do you trade a breakout? Buy the dip and gone. Right? Okay. So what I don't want to do is when it's already happened, or let's say as it's happening, I'm like, you should buy here. I'm actually avoiding that. Because if I say buy here, buy now, when we are there, you see what I mean? People stop learning and they come to the webinars or they pay for a membership and they want me to do all the work for them and just tell them what to do. Right? Oh, you're really typing up a storm, dude. The reason double bottoms and doubles occur because traders are taking profit on the first. Yes. Yes. Too many sell orders. Yes. You know, it's a whole chapter in my book, yo. All right, so you've been following me for 7 years. You haven't been in my webinar for a long time. At least I don't recognize Futures Trader. But now you're showing up and you're schooling me? Why is this? You got something you want to say, my friend? Oh, that's called Epic Pen. Oh, you do this for a reason. Okay, what is your reason? Okay, yes. Okay, cool. Now, if you're cool with being part of our community, you're welcome to stay and be a part of the community. Okay? So, welcome, but please don't be disruptive. Okay? Think we're cool with that? This is gold. Let me change to the chart I typically trade with. No, right? Cool. All right. So here's what it seems to me, futures trader. It feels to me you're here to steal an audience so that you could educate them yourselves. That's what it feels like. Feels like you're fishing. All right. So gold, this is where we were. And then you can see how these monthly pivots really, really come into play. But in this scenario, what we've described before is it's a moo trade where when you're this far outside of the projected top of the month, it's a tsunami. So I talked about this, I don't know, 2 weeks ago or something. You don't want to attempt to swim against whatever fundamental move created this. Dude, all right. You're being disruptive, dude. I don't, anyways, I don't need your. Gee whiz, huh? Just amazing. Guy hasn't been here for 15 years and now he's showing up to lecture me. Like, oh my God. Did I drink out of his wine glass or something? Like, holy crap, now he's schooling me. Jeez whiz. It's too bad. It sounded like he had something to say. All right. And it is late. It is late. It's 9 o'clock. So why don't we regroup tomorrow? Big day tomorrow. Should be fun. Should be exciting. I must have peed on his door or something. It's amazing. Huh. So, anyways, I guess I earned a thumb down today. So I guess I have another thumb down guy. But anyways, thank you for the loyalty and respect you show me, guys. But also thank you for the loyalty and respect you show your fellow currency traders that are here. I've known some of you guys for close to 15 years. It's your friends and your family, right? So that's really cool. But we have a lot of new people here, and I see 99.9% of the time everyone treating everyone else with respect. I see you guys helping each other, try this or go there for the download or all that kind of stuff. That's really cool. I appreciate that. I really do. This is a good community. Um, I try not to make it too salesy. I mean, look, if you need roll your sleeves up help, I've created video training courses for you, and we have a live coaching service now. If you need someone to like a real human being help you, you have those there. I mean, they're resources for you to use. It's not a sales pitch. It's if you need the help is available, and that should do it. So, anyways, peace on earth. May the pips be with you. Oh, what time will you be on live tomorrow? 7:30 in the morning every single day. Make sure you subscribe. By the way, if you subscribe and you're not getting notifications, go to twitter.com/fxbootcamp. And when I click start streaming, it pops up a notification. Okay. So every day, 7:30 a.m. New York time. It's approximately London lunch. It's a good time for us to get together and align our satellites and our watches and all that kind of stuff. So so cool. So again, thank you for being on my team. Thank you for all the hard work that you put into it. And there's at least 4,000 videos on YouTube associated with my work. You can watch all of them for free. It's all there. So I'll see you tomorrow, guys. Thanks again. Cheers.